By the end of this video, we're going to be familiar with the story behind the numbers of Costco Wholesale Corporation, Charlie Munger's preferred investment as of the last 2 or 3 decades or so. Definitely an example to investors everywhere to be so enamored with a single company for this long. So let's dive in so that our wisdom can blossom. Statement of income. Net sales ever increasing, membership fees ever increasing, operating income always staying at around twice the total membership fees. I don't think that's a coincidence. I think that's evidence of just how clinical the execution of this management is. Merchandise costs as a percentage of net sales locked in at, I'm pretty sure, yeah, this would be about 90%, almost exactly every single year. The balance sheet. On this channel, we have said multiple times that a ratio of total assets to total liabilities of 1.5 is ideal for retail companies. In the case of Costco, we're going to take 69 divided by 44, and that would be 1.56, I believe. Pretty much at the ideal. Statement of cash flows. Coming down to the investing activities, this line, not always present, additions to property and equipment. Many companies would call this capital expenditures, and this is also very sizable. The conclusion for the opening move, we're going to look into how their capital expenditure deserves a special name. Maybe Costco's got an interesting take on what capital expenditure should be for a retail business. Before we find the additions to property and equipment, let's look at the net property and equipment first. Here, a helpful table breaking down 26, almost 27 billion in property and equipment. Lots of it is just straight up land, and I find it quite helpful that they're specifically calling out a row for construction in progress. Now, actually, as a percentage of buildings and improvements, the construction in progress has actually lowered since the last year. We went from about a 7.5% to a almost 5% number here. Therefore, whatever the additions to property and equipment was in the cash flow statement, that was not going in a significant way towards construction in progress. Their constructions in progress was actually slowing down. One thing that actually occurs to me is that perhaps while the number of warehouses that they're constructing themselves is going down, they could have been shifting towards using more leases. To check that, we've gone now to note 5, talking about their leases. There is a breakdown of the cash paid for leases, and it's actually very much in line with previous years. And so that big row we saw in the cash flow statement is also not about leasing warehouses. Very helpfully, we're seeing an international breakdown of several important line items. They agree that additions to property and equipment is an important line item, and now they're breaking down that the bulk of this, more than 2/3, is happening in the US and Canada. While the other international is very much in line with previous years, there's actually been a noticeable acceleration in additions to property and equipment in the US. And now, having kind of searched this entire document for possible explanations of just what is an addition to property and equipment, we confirm to ourselves that it's not building new stores, it's not leasing new stores. The only other potential things that they're explaining are part of their definition of property and equipment are computer software or the repair and maintenance costs. Assets classified as essentially needing to be repaired, blah, 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 were immaterial in the latest year, meaning that they've actually given us enough to know that this increase, roughly 2.5 billion, are brand new investments into computer software. Without needing to, they called out their e-commerce business. Hey, if you're getting more comfortable uncovering the stories behind the numbers, please like and subscribe. These billions of dollars being spent on software is in order to increasingly becoming an e-commerce solution. I've actually looked up the executive officers of the business and found that yes, indeed, they did create a role specifically for e-commerce. This man, Jim, prior to becoming this chief operating officer role, he was in charge of e-commerce merchandise for 5 years, starting a decade ago. So let's look at the last decade of this man's career. He was fully focused on e-commerce merchandise. That earned him promotion to Chief Operating Officer of the Northern Division, which very likely, I'm a little bit speculating here, but very likely is where the bulk of stores are for Costco are in North America. And so now, as the Chief Operating Officer of presumably the bulk of stores, we're seeing increasing amounts of capital expenditure, or as they call it, additions to equipment, going into software. We're seeing now the influence of Jim's promotion to Chief Operating Officer. Well, then this is just a happy, straightforward story. Why are they spending an extra 2 point something billion dollars on software this year compared to last year? Well, I think I have that answer too to finish our story. Here we see a table under results of operations. This is the percentage change in each category versus the previous year. In 2023, the latest year, there is only one row where there is a negative growth rate, and that is the e-commerce row. So we have a chief operating officer who got promoted because of e-commerce. We have multiple places mentioning that e-commerce is pretty serious, but not the main priority, as it is less than 10% of all sales right now. What led to the decision to now spend billions of dollars on software trying to correct this? So Costco very much showing that they're going to stand by their e-commerce business, even if it has a down year. Well, then they're not going to just let that happen. They're going to immediately respond to a down year. We are now going to call in the Sage Seeds AI to get its take. Retail businesses are famously low margin, but low margin does not mean low returns for investors. I don't think it's going to be very controversial for me to say that the internet has changed this already somewhat complicated picture. I'm sure lots of people would put retail companies in the too difficult pile. But then there's Costco, which throughout year after year after year of retail disruption has shown that some retailers continue to grow. Some retailers have such precise execution that you don't even, the internet who? Not worried about it. Thanks to certain high profile investors, chief among them Charlie Munger, Costco has gained this very respectable reputation. And they're now operating at a point where a single year of no growth leads to them reacting immediately, aggressively, and clinically with precise investments in order to correct anything that isn't growing, aka e-commerce in the last year. Please like and subscribe. Also pause the video. This channel is about hearing these stories and then building up an intuition through practice of whether these stories represent value or not. Take a moment to guess whether the story we just heard about Costco Wholesale is going to be ranked high or low in value by the Sage Seeds AI. It's also tremendously helpful if you explain your reasoning to someone else if you are able. Costco is ranked 45 out of 62 in value for the 2023 season so far, putting it in the bottom 30% of companies. I'm now going to interpret what the Sage Seeds AI is thinking. Expensive. So expensive. Hard to find a company as expensive as Costco, basically. That hurts the value ranking. How is it still relatively near the middle? Well, it's because this is a very profitable and sturdy business underneath. And so, high reputation, clearly a deserved reputation. Even the Sage Seeds AI gives a lot of credit to Costco. But this is why it's helpful to have a kind of emotionless AI to assist us. It is worth considering that even such a great company can get a lower valuation ranking if it's the case that you're only going to be able to pay a very high price to become an investor. But in this case, the price is the only negative. I feel like it's only fair to tell you guys what price the model was looking at. Costco was trading in between $570 and $575 per share. So Sage Seeds AI using roughly that price. Since I genuinely can't find a negative other than that, I'll just remind everyone that if that price of $570 were to change around, as that often does in public markets, well, then you could see a Costco ranked much, much higher, much, much more quickly if that price decreases at any point. Just something to keep in mind if, despite what I'm saying, you still want to be on the Costco train as it continues to chug along into the wide world of e-commerce. Thank you for watching until the end. Let me know your reaction in the comments. and then share your wisdom, share this video.